Welcome back. You're watching Market Cafe right here on ET Now, where we are tracking the historic summit that's currently underway at Sentosa Island. The first time ever that a sitting US president is meeting with North Korean leader Kim Jong-Un. The key questions are, however, what exactly will the outcome of this meeting be? Will Kim Jong-un agree to denuclearization? If yes, what exactly does he mean by denuclearization versus what the US expects from him? And would this event be more PR, less detail, given that both leaders have the tendency to want to come out as winners, to want to come out as heroes? And more importantly, what should you, the market people, watch out for? So let's introduce Jay Bala, the Chief Market Technician with cashthechaos.com. He joins us right now on the show. Jay, thanks so much for joining us on ET Now on this historic moment. Let's start off first with what this event means for the market. Like I was talking about earlier with Ajay Sharma as well, you know, we have always listed Kim Jong-un's unpredictable regime as one of the key geopolitical threats. With this meeting come by, would that now threat be significantly reduced? I know it may be a little too early to say eliminated, but at least that risk premium perhaps would be reduced significantly? I just wanted to ask you about the implications of this meeting on on the markets in general. You know, we have always said that Kim Jong-un's unpredictable regime is a key risk for the markets. With this meeting, does that risk get reduced significantly?
So is that for me?
Jay, that's for you.
Okay, see, markets aren't about just an event, and markets are much more holistic than events can provide knee-jerk reactions. So the markets, as they are placed, it does look like there are more positives likely to come through rather than negatives. But if there was negative, the markets could dip a little further in the short term. But this is not likely to impact the major trend. So the major trend would remain intact. But the early signs are that from the if you had to look at the tea leaves from the Indian markets, recently we had a carnage on the mid cap and the small cap space. They are starting to bottom out and show early signs that things are reversing. So I don't from the way the markets are positioned, I think it's more likely that we should have a positive outcome rather than negative outcome.
Well, yeah, at least the early indications seem to be that. And if not a major positive like a denuclearization, at least the can will be kicked down the road. The start of the dialogue has taken place. So, Jeb, all in all, like you said, the overall story, the big picture for the market, how would you read into that? Then are you seeing more perhaps positives in the overall story, or, at this point of time, we just seem to be on a still road?
Yeah, see, basically, the macros are lining up well for the markets. I look at markets from a slightly different perspective than people look at it. Basically, crude, what people will see as a negative is actually a positive for me. There has always been positive correlation between crude and the equity markets. Whenever crude has risen, the equity markets have actually risen. It's not. It might bring in a short-term negatives like current account deficit, but they don't matter to the equity markets. For the equity markets, growth is more important than anything else. So when the markets are seeing an uptick in crude, it's actually a demand-led uptick. So basically that's an indication that growth is intact, and that's what is pushing the markets higher. And I expect crude to hit somewhere close to 95. So that's actually a positive for me.
So at this point of time, just shifting focus back to this meet, it would, whatever the outcome would be, the impact would just be short-term and short-lived on the markets?
Absolutely. It's going to be a knee-jerk reaction, and any positive is likely to be, not a big one. But if there's a negative, there could be a slightly big, seemingly big one for the short term. But the bigger trend, the medium-term trend and the long-term trend, they will remain intact. And it's just the way the puzzle is going to fall in place. The short term is a bit mixed and slightly tending towards positive. I think the outcome is not going to have a big impact.
Very short-term, short-lived impact on the markets. That's what Jay is saying. Longer picture, something that we have to focus on. And for now, according to him, with crude, Jay, I'm actually surprised you said that crude, even if it hits 95, you believe that the markets would go up. But the tendency, at least, has been that, with crude rising, markets have risen. But aren't you worried that how this would bode for the Indian fisc? Because, we are extremely sensitive to a rise in oil price.
Yeah, see, if you look at the markets, when crude was $30, it didn't provide tailwind for the market. In fact, when it fell from 110 to 37 odds, that was the worst time the equity markets had. Many people are projecting, that will provide a 1%, $1 fall in crude is going to give so much tailwind to the market. Nothing happened. In fact, the markets fell harder. Basically, risk assets rise in tandem. So, we want markets that perceive as risk assets everything to rise. That will be an indication the markets are going higher. You'll see short-term dip in crude, but the overall trend for the crude as well as equity markets are higher, and they all move in tandem.
Okay, so for now, the momentum seems to be positive, like Jay as well flagged off. The story seems to be good for the markets. Jay, I think I can let you go on that note. Thanks so much for just dotting down what exactly this event means for the markets at this point of time, according to Jay.